Daniel, and good morning, good afternoon, or good evening, depending where you are, because we have this international panel and international audience. It's wonderful to be part of this fantastic event. Many important and very much needed discussions, interesting speakers. And of course, thank you to all the attendees, because without interested and engaged audience and stakeholders that are here present, we would not have events like this, and the progress in blockchain would surely be more difficult. So my name is Agata Ferreira, and I would like to welcome you all to our panel, Crypto Asset Regulation, EU versus USA versus Asia. Interesting, but even more so, very important and timely topic. Few words about me. I'm a lawyer by background, scholar and university assistant professor at the Warsaw University of Technology. I'm also a member of expert panel and EU Blockchain Observatory and Forum, as well as member of Advisory Council for Blockchain for Europe. It is my great pleasure to welcome here today our panelists. I'm especially delighted to be moderating such an all-star, all-female panel from literally across the globe, as Daniel has mentioned. So all our panelists are top professionals in their field with remarkable achievements in blockchain space, and I'm very grateful they found the time in their busy schedules to join us here today and share their incredible knowledge and experiences. So I just introduce you briefly, and then I ask each of you to say a little bit more about yourselves. I welcome Joshua Clayman of Linklaters, who is joining us from the US. Ursula McCormack from Kingswoods and Mallesons, that is joining us from Australia. Tina Baker-Taylor, that is joining us from Crypto.com from the UK. And Nina Siedler from DWF and board member of INAPTA, that is joining us from Germany. If I could ask each of you to say a few more words about yourselves, maybe we start from Nina.
All right. Happy to start. My name is Nina Siedler, as you mentioned, partner at DWF, where I had the global blockchain competence group since 2017 when I joined that firm. I have a background in structured finance and regulatory work, and was drawn into blockchain in 2015. Since then, had been very much involved in the community building. We talked to numerous politicians trying to explain what this new technology is about and what good and positive sides it could serve for the community. Formed in 2017 the German Blockchain Association, and then in 2018 a European legal think tank called ThinkBlockTank in Luxembourg, and was then approached by the European Commission to support with building INATBA, the International Association of Trusted Blockchain Applications in Brussels, which happened in 2019 with more than 100 founding members, and where I had been elected to the board of directors for the first board. Yeah, currently I'm trying to focus a bit more on content work rather than community building. Also part of the expert panel of the European Blockchain Observatory and Forum, where Agata is also a member. And what is of specific interest for me is the UNIDROIT working group for digital assets, where there is, first of all, a group taking a look at the civil law questions and not only the financial regulatory questions of digital assets. Yeah, Josh, I had the pleasure to meet also in 2017 at the University of Pennsylvania, the Wharton Reg Ed Tech group. And I really miss, that this group didn't come together for quite a while now. And Ursula and I, we met now, let me think, a year ago or something. And Tina, obviously, we're both from Europe. We have been on so many occasions together. So it's a pleasure to be with all you together on this panel here.
Thank you very much, Nina, for this introduction. Tina, can you go next, please?
Sure. Thank you so much, Agata. And it's really a genuine pleasure to be on this panel today with friends from far and wide. It's rare that you get to know everyone and have worked with them in some capacity over the years on one panel. So that's quite fun. So I'm Tina Baker Taylor. I am the general manager in the UK for crypto.com. I lead our UK market strategy and our regulatory affairs here in the UK. I have worked across Europe and at a global level on policy issues around crypto assets. I'm formerly the director of Global Digital Finance, which is an industry organization working to develop some standards and best practice guidelines for crypto and digital asset firms. That entity was founded in about 2018, early 2018, end of 2017, really on the back of the ICO boom, where the industry experienced a huge amount of growth and also a huge amount of weird and wonderful things coming to market that regulators were really struggling to grapple with. And that organization and all of its community members, there are now hundreds, worked to, at a global level, try to align and harmonize some of the thinking around policy for crypto asset regulation, so that we didn't have lots of pockets of arbitration opportunity and more opportunity to interact and interoperate around the globe, as digital assets are indeed global assets. Part of that, I was in banking, working on enterprise blockchain. So I've been in the blockchain space for a period of time. I think what I'm most interested today in is looking at how regulation is impacting the commercialization of not just digital assets, but blockchain in general. And we're really starting to see a huge amount of innovation, especially I think in the DeFi space is, one example of a industry growing at a rapid pace that regulators are struggling to keep up with and potentially trying to re-engineer some policy after the fact. So I am looking forward to covering some of those issues with this panel today and looking at where some of the differences are across the globe.
Thank you very much for this introduction, Tina. I hope we get the time to talk about all these things. Maybe we quickly move on to Josh, and a few words from you, Josh.
Hi, I'm Josh Clayton. I am Senior Counsel at Linklaters, where I'm one of the global tech sector co-heads, and I'm the U.S. head of FinTech and head of blockchain and digital assets. In the U.S., we call our practice the Digital Economy Group, as opposed to FinTech per se, to try and take a more expansive view of that. Apart from that, I'm on the board of the Wall Street Blockchain Alliance, and I've chaired the legal working group there since 2016. I have the pleasure of being part of a number of industry working groups, as well as some groups that are close to my heart, including Node Women and Diversity in Blockchain Inc., which are both focused on diversity and supporting of perhaps underrepresented groups. Beyond that, my background, for the first 10 years or so of practice before I got into blockchain, I was a finance and corporate transactional lawyer, and I actually got into the blockchain space because I was hearing about how big banks that I was representing in large leverage finance transactions were looking into smart contracts. And I was like, what's a smart contract? And what does this mean for my job? So that was a long time ago now, and we've come a far way, but I love the space, and I'm really excited to be on this panel with all these great leaders.
Thank you so much, Josh. Thank you. Ursula, please say a few words about yourself.
Yeah, look, I'll keep it brief. So I'm so delighted to be here. I'm Polish by background, married to an Irishman, so Europe is a very big part of my background. I grew up in Australia, in Hong Kong for 13 years, and now back in Sydney, basically covering Asia still, and very much focused on Asia. So I'm a partner of international law firm Kingwood Mallisons, and I pretty much squarely focus on financial and data regulation, with a particular focus on emerging technologies, and of course within that, virtual assets, particularly over the last 6 years. I guess on the policy side, hugely important to all of us, and I work a lot alongside our regulators as well as governments in the region on their digital economy development. So that's everything from digital equivalence of documents, digital identity, right through to what we'd be talking about today. On the industry side, I had the great pleasure of working with many on this panel, Global Digital Finance, as well as the Wharton Group and World Economic Forum on some emerging issues, including DeFi. And gee, what a lot of fun it is. So very much looking forward to the panel, and I'll hand back to you, Agatha.
Thank you so much for this introduction. After these introductions, I'm looking forward for you to share your experience, your views, to compare those views from different regions and approaches from different regions. So let's move on to the topic. Well, I believe myself that we are at the tipping point from the regulatory point of view. The developments in crypto asset space and the level of interest from investors and market participants triggered a lot of regulatory scrutiny and activity. And given the speed of this technological development, as you have mentioned in your introductions, regulators have struggled to keep up and maintain a unified and consistent approach. So what we have at the moment is a piecemeal approach of divergent regulatory responses and approaches, with only a few leading jurisdictions taking a proactive steps, and majority of the countries are still passive and taking wait-and-see approach. The task of regulating crypto assets is enormous, and this phenomenon is quite new, as much as the technology on which it is based, and it has risen from literally nothing to, in just a few years, achieving market capitalization of cryptocurrencies alone exceeding 2 trillion as of today. And let's not forget that crypto assets is much broader than cryptocurrencies alone. So in the absence of this off-the-shelf regulatory framework precedent or ready regulatory architecture for crypto assets, the quest for an adequate regulatory design for crypto assets is ongoing around the world. There are many concerns and interests at stake. Some are incumbent, some are entirely new, and some are jurisdiction specific, but let's not forget that DLT is inherently borderless. So global and cross-border perspective is also very important. So before discussing any upcoming and ongoing regulatory initiatives, I would like to ask each of you, where are we today, where you are in your respective region in terms of crypto asset regulations? And what are the industry needs and expectations? And do you think that current regulatory design is fostering or inhibiting the innovation in crypto asset space? So maybe we start with Nina again.
All right, yeah, happy to give an outline. So in Europe, basically, what we have aligned for quite a while is the European-wide securities definition in MiFID, Market in Financial Assets Directive, and or Instruments Directive, and that applies throughout. But that only resulted in a very limited harmonization because it's a directive, it's not directly applicable in the nation states of the European Union. Hence, every jurisdiction implied it internally within the boundaries set by the directive as they wished. So typically what we see is that jurisdictions add further types of securities and further prospectus requirements beyond the ones that are required on a European level. So in the end, in order to be sure that you don't issue a token which results in a security issuance in Europe, you needed to check all countries. That I believe, will maybe not be picked up that quickly, but we'll get to that, I think, a little bit later. We are seeing a new proposal for other types of crypto assets coming up called the MiCA, Market in Crypto Asset Regulation. In addition to that, looking at Germany specifically, we have a very tight regulation. Bitcoin and other native tokens had been financial instruments already since 2013, I believe, or 14. So for quite a while, they are captured by the overall financial regulation. So if you want to offer any type of service surrounding crypto currencies, then you needed a license already in Germany for a couple of years now. And that had been broadened at the beginning of 2020 from cryptocurrencies to what we now call crypto assets. And that basically involved every asset that can be traded, to make it very short and simple. So everything that is tradable is now captured by that financial regulation and is, according to German law, a financial instrument. So that's quite a very narrow space, and also the reason why the most startups, even if the teams are located in Germany, tend to offer their ventures abroad.
Thank you, Nina. So we are in Europe fragmented at the moment as of today, and due to these divergences, not very conducive environment for innovation. And some of the jurisdictions like Germany took a very proactive approach, but also very robust, as you say, and quite restrictive. Thank you very much. How about Tina? Can you share your view from the UK, outside of EU?
Sure. Yeah. So now outside of the EU as of this year. So I think there are still some hangover policies in place that when we were part of the EU were implemented, and a number of those surround kind of payment services and e-money, for example, and those types of regulatory guidance still align to EU. Where I think we're going to start to see some divergence is in comparison to, as Nina said, MiCA, the market and crypto asset regulation, which I think on a positive side will bring together all of the EU under one regulatory regime. However, there will be those jurisdictions that have transposed guidance that exceeds MiCA, like Germany or France. I think it'll be interesting to see how that plays out as the consultations are debated in the European Commission. But there are some likenesses between the UK and the EU, especially around stablecoins. So the UK has just undertaken a consultation on the treatment of stablecoins and bringing stablecoins into the perimeter of e-money. Today, they kind of sit outside of the very, very loose guidance given by the Financial Conduct Authority, which classify tokens in three ways. Pretty similar to what you see in other jurisdictions. So there are payment tokens, which would be Bitcoin and Ethereum, security tokens, which are covered under securities laws, no news there, and then utility tokens, which are still kind of this gray area. And stable coins were kind of not really considered. And then they came out a year later and acknowledged that they existed and that further guidance would need to be undertaken to provide a roadmap for how those would be treated. And so that's what we're seeing now. As a result of AMLD 5, again, going back to directives need to be transposed into law by the countries. And so they don't always show up in exactly the same way in every country. In the UK, this resulted in the Financial Conduct Authority putting in place a registration scheme for crypto asset firms. So this went into effect in January last year. Firms had until January this year to register, and the FCA was meant to, they're not licenses, but grant the ability to continue to trade by January this year. Unfortunately, the FCA was expecting something like 80 applications, and they received well over 200, and they just weren't staffed or prepared to address all those applications. So unfortunately, they had to issue some additional guidance saying, okay, we're going to put in place a temporary register, and everybody in the UK that had registered previously can keep trading, but nobody's authorized yet. So I think they've authorized 3 companies out of that 200, and we now have a new deadline for July. So what that's meant, and there's a number of other things that are ongoing around bringing advertising for crypto assets under the existing financial services promotion, whether they're regulated or not, which is a very confusing proposal and requires that firms need to have their advertising or any marketing of any kind really, or customer communication signed off by a FSMA regulated firm, but there are no FSMA regulated crypto asset firms. So we're not quite sure who's supposed to sign off on that. Little bit difficult. So in the moment in the UK, everything's basically in a halt. We're just kind of frozen. And that's had a real commercial impact, I think, on those businesses who either set up in the UK or who operate cross-border, obviously. So it's not a super great situation.
Thank you very much, Tina. So what I understood is a lot of uncertainty, some hangovers from the EU era, but also needs of industry that exceed the capacity of the regulator to deal with this process. Yeah. Okay, thank you very much, Tina, for this. How is the US looking in this landscape, given that you yourself are a landscape of different states?
So I would say this is probably a common statement about the US, which is it's complicated, right? While in certain other jurisdictions, sometimes we can get a clear and simple answer with respect to whether something may be permitted or even whether it may be regulated or not, or outside of the regulatory perimeter. Certainly within the US, I think of it more as like a spider web. And the idea that something would not be subject to some kind of regulation is kind of I was going to say a foreign thought, but I don't mean it. I guess it's kind of an unintended double entendre or something. But yeah, it's not really, things are regulated. And while, people say, okay, we're not regulating the merits of technology, certainly maybe the merits are not, but the other aspects seem to be in many respects, particularly in the digital asset space. And sometimes the way the regulations are applied or interpreted or thought about, even informally, obviously I'm not a regulator and I can't speak on behalf of regulators, but just in discussions with certain regulators, some of the concerns are quite different, for example, with the same regulations such as Reg S, right, for sales to those located outside of the US, than they would be if you were selling equity, via Reg S. So you really need to, if you're planning on, transacting in the US, often it's good to either speak with regulators with your counsel or speak with counsel who frequently are speaking with regulators. You can think about, how things are, like what the hot buttons are. But what I would say, to go back to the question of it, is it's complex because as Agatha mentioned, there's the federal level, then there's the state level. And then we don't have a single regulator that has jurisdiction over digital assets. Generally, you've got the SEC, right? And you have the state securities regulators. You have the CFTC, right, for commodities. And then you have state equivalents for commodities regulation. And then you have FinCEN at the federal level, regulating digital assets as though they're money. And then you have state level licensing. So while you might say, okay, I'm going to register with FinCEN at the federal level, there are actual licenses for many of these states. And some of the states take longer than others. There are certain states that don't consider digital assets to be money. But there's a lot in that way. And as has been said previously, I'm sure, if you look at the IRS, they see digital assets as property, different types of property. So there's a lot of complexity. And I think sometimes when trying to know whether you can launch a project or expand a project into the US or to reach customers in the US, it can be a time-consuming process and not as straightforward as you might hope. So but what I would say is I have great faith and in our regulators, and I realize that everyone is trying to get to actionable points. There has been a lot of progress, but just for those who are watching who are contemplating a project in digital assets, it's definitely it's a complex inquiry.
Thank you, Josh. So we have a complex landscape at the US, and it looks like it's becoming more and more complex as we go along. So let's see if we have a better news from Ursula. Could you say something about your region, Australia, and hopefully more broadly Asian region?
Yeah, let's talk about Asia. So yeah, look, everything's streamlined, everything's consistent, it's all one market. No, it's every single market is different, of course. And look, we have everything from, complete outright bans that were introduced in mainland China in September of 2017, right through to very sophisticated regulatory regimes like the likes of Japan, for example. We have some jurisdictions that are really trying to leap ahead and, really, I think, put a positive spin and be attractive to the virtual asset sector. And I would certainly put Singapore in that sphere, particularly because it's introduced quite a comprehensive regime, but also signaled quite a strong, welcome to the industry. The market that I know and love, Hong Kong, has actually been one of the most interesting markets because it has attempted to apply regulation a bit sooner than it was able to put through specific regulations to regulate virtual assets. And it's a really interesting case study, particularly in relation to what's proposed for Hong Kong. So what happened is in Hong Kong, the securities regulator proposed an opt-in regime whereby exchanges could put their hands up, have at least one security token in their mix, and then be subject to the whole suite of regulations that the SFC had implemented. And they would submit to that regulation for all of their assets, even those that were unregulated. And what that achieved was it really provided a pathway for those who were really seeking to obtain that imprimatur of regulation on their business and to provide that pathway for the regulator to really understand the sector, and so it has. And it's issued a lot of guidance for brokers, so securities brokers that also want to be involved in virtual assets, fund managers that also want to have assets within their pools in the virtual asset sector. And so it's grown as quite a sophisticated regime, but still not comprehensive. Mm-hmm. And what's interesting is that under the pressure of what's happening internationally, the pressure of, of FATF, which looms over every jurisdiction worldwide, is that a new regime is proposed. And that regime is interesting because it will cover a range of services providers. But importantly, what's proposed is that retail would be out, so that the whole virtual asset sector, as far as exchanges, a number of traders would be concerned, would only be able to serve professional investors. So you can imagine that's incredibly contentious within Hong Kong, and we'll see how that bears out. And particularly the signals there are that it's just initial. But we're already seeing FATF assess jurisdictions as against those recommendations. Philippines was one of the first, and quite severely judged as against implementation of the travel rule. And I think some of the comments made earlier around readiness are really important, because in that case, it's technological readiness. Tina spoke about regulatory readiness. We see queues in Singapore of license applicants, very, very long, and certainly in certain markets, a prioritization of incumbents, which is not great. But what I would say is that we in Asia had a number of, let's say, regulatory refugees out of places like North America, where the regulatory regimes were so uncertain that we had law firms that were unable to issue opinions in writing. They would only provide guidance over the phone. We're still encountering, working on a project with 57 jurisdictions at the moment. A number of jurisdictions simply cannot form an opinion as to whether or not a particular asset is regulated or not. And so I would say that, when we talk about regulation as a hurdle, it's generally an enabler in my view, and certainly provides confidence to business, particularly when there are pathways that they can speak to regulators, and Josh has spoken about that, but also just to understand where they stand. The other theme I was going to raise is cross-border, so the fact that these, businesses are generally online. COVID means that more and more, or less and less, we're traveling, fewer boots on the ground, so to speak. And so the rules around extraterritorial application are incredibly important at the moment. So a lot of the work that we're doing at the moment is really helping companies assess their risk when they post, advertisements on widely used social media without targeting necessarily a particular jurisdiction. But that whole offering landscape is completely different than it used to be. And then the final thing I'll raise is that I think one of the misperceptions around Asia is that it's behind in relation to digital. And that couldn't be further from the truth. A number of markets really see digital as being a pathway to leapfrog traditional phases of development. So, the likes of Thailand, incredibly sophisticated digital equivalence legislation, recognition of smart contracts, and a number of markets really embracing security tokens and recognition, of non-paper-based systems. So I'll pause there, but yes, certainly a lot to talk about in Asia.
Well, thank you very much, Ursula. So from what you were saying is basically that the regulators now are focused for this or another reason. For some it was the Libra project that was a wake-up call, but the regulators are now focused. They sort of acknowledge the potential and risks of this new technology and crypto assets, and there are some initiatives now coming, being worked on and developing, as the one in Hong Kong that you mentioned. So maybe we stay with you just for a moment, and that question to all of you as well. Where is it going? So what regulatory activities are ongoing, and how are regulators in your respective regions addressing all those uncertainties or planning to address all those uncertainties? Now that we definitely know that there are uncertainties and difficulties. So are there any initiatives worth mentioning on that front from where you are, Ursula?
Yeah, look, I would just mention that, the general approach is staged. So I think all regulators acknowledge that there is so much in this sector that they cannot address today. And examples would include decentralized exchanges, a number of DeFi platforms, automation generally, and we're starting to see that as being front and center. But we certainly see a staged approach. And so I think most regulators recognize that they can't bite off and address everything just yet. I also think that we are starting to see a recalibration of understanding of risk and perhaps a more discussion about what risk that it is actually looking to be addressed and what are the potential downsides of taking a very stringent approach as against issues like privacy, for example. And of course, the CBDC March is another issue that is bringing that to a head.
Okay, well, thank you very much, Ursula. And Josh, do you see any initiatives on the regulatory front, especially on the federal level, to harmonize this US landscape coming forward?
So I'm not sure about harmonizing per se, but I would say that there have been some joint statements that have been made, say, by the SEC, CFTC, and FinCEN, for example. Essentially, as I see it, with the goal of saying, look, regulations cover this stuff. So something is going to regulate these digital assets and digital asset transactions. I do think also at the federal and state level, there's a lot of interaction. For example, recently in, I believe the matter was called Two Oceans, but I'm not exactly sure of the company name. I think it was Two Ocean, where the state of Wyoming had said, hey, we believe that this is a qualified custodian. And then shortly thereafter, within 2 weeks, the SEC noted that, well, that at the state level consideration, at the federal level, we're still considering. And by the way, here are questions that we have that we need to hear about, that we're still gathering information about. So I think there is a high level of interaction between and among regulators. I also think, in some cases there is federal preemption of certain types of regulations, and in other cases there isn't, right? So I don't think that we're going to see harmonization per se, but I do think that the message that's coming out, or that seems to be coming out, is just bear in mind, you can't just look to one regulator and think that, even I'll give a practical example without giving away any client information. in speaking with, for example, FinHub, there have been times where they've said, okay, so what are you going to do about your KYC AML responsibilities and things like that? And yes, that's a different regulator, right? But they're all thinking, they're all speaking together. And at least that's my understanding. I'm not a regulator. Oh, and nothing we say on this panel is legal advice or investment advice.
Thank you very much. Thank you. So Tina, I think we can now move on and talk about what you just mentioned, that we're going to see some divergence in the UK. So it's an opportunity in a way for the UK to distinguish themselves and gain a competitive advantage. What is coming from the UK on that front?
Well, you are 100% right. And this is the message that industry bodies like Crypto UK and to some degree, with support from the likes of Blockchain for Europe and the Global Blockchain Convergence. I'm on their steering committee. There's a number of industry bodies that are suggesting to, UK PLC that this is a time that we could potentially put in place, much like Singapore, a environment that welcomes in a risk assessed manner crypto asset firms to come to this jurisdiction, or a major market jurisdiction where the FX capital of the world. It is a financial epicenter or a hub globally. And so we're well positioned, especially as a fintech hub, to be able to, we have the right talent, we have, the right payment structures, we have open banking here. There's so many ways that the UK has really leapt ahead in digital finance. And we seem to be kind of at this impasse around crypto assets. And this is the time to really exercise and utilize the independence that we've, just demanded and use it for good. Unfortunately, at this point, I feel like, as we touched on earlier, we just aren't quite aligned across the number of government bodies that contribute to financial regulation here. So unlike the US, we don't have this kind of spaghetti framework of the state and local level plus different regulators for different types of assets. We only have one financial services regulator. However, they receive their mandate from the Treasury Department, and the Treasury Department receives their mandate from Parliament. So if you're trying to implement regulatory regimes or frameworks, and you essentially need new legislation passed to do that, because this is trickle-down structure, that's going to take a long time. So what we're trying to do is work within the perimeters that we have now, and really start to educate the potential opportunities for how risk could be mitigated. Ursula mentioned something earlier around, kind of the incumbents in the industry. And so when I say incumbents in this context, I mean some of the bigger or greater, longer established crypto asset firms, almost being approached like, well, they're so big, so we need to do something about them. And then that has a knock-on impact on competition and innovation for some of the smaller or newer entrants in this particular market, just kind of being sat on a stool saying, we'll wait, we'll get to you when we get to you. And that's not necessarily a fair and competitive playing field either for those companies. So that's a bit of a challenge. And I think the third thing is that we're still part of the global financial ecosystem, and things like the new FATF guidance being proposed, some changes to the way they're expecting firms will be compliant with the travel rule. There's a lot of cross-border issues there. There's a lot of interoperable technology issues there, as well as the ever increasing growth of the list of who FATF considers to be a virtual asset service provider, now extending into potentially self-hosted wallets and technology companies. They were completely out of scope before, and companies that are operating decentralized finance type of services. And what FATF has said is that there's no such thing as decentralized finance, and that if somebody is able to undertake a financial service, someone must be giving it to them. And so when you kind of look at the lens of the layers of challenges that we have around identifying the risk for the regulator, being able to demonstrate how we would mitigate the risk. And then you keep adding all of these additional things on, like, oh, we're just going to put stable coins into, the e-money regulation. And then we say, okay, but there's a lot of ways that these types of tokens don't operate in the same way that e-money does. It does kind of feel like a bit of a stop and start. And so, I personally believe that this jurisdiction does have a lot of talent and a lot of investment that has been made, especially into the fintech sector. And it would be exceptional if we could leverage that to become an industry leader. And I would point to Singapore as one of those jurisdictions that seems to be doing a really great job.
Well, thank you very much, Tina. A lot of opportunities, but also a lot of challenges, as you just said, and so many issues that you all have mentioned. I'm really sorry that we won't be able to talk about all of them, but some of them are really, really interesting and topical, happening right now. So I left Nina at the end in this round to talk about our MiCA and our unprecedented regulatory effort on such a jurisdictional scale to come up with this bespoke, prescriptive, and detailed regulation. Can you tell us more about that, Nina?
Yeah, let me start a little bit more back with the history, right? So we started a couple of years ago with specifically the smaller EU countries starting to develop their own regulatory regime towards crypto and tokens and so forth. So Gibraltar kicked it off, then Malta stepped in, and Liechtenstein ultimately developed a quite sophisticated approach, maybe a bit more on the civil law side than not only on the regulatory law side. And obviously Switzerland, not being a part of the EU, but being geographically in Europe, had always been a front runner with their regulatory and also tax regimes and very approachable officials where you could discuss approaches and projects in advance and so forth. So we saw, an increase in splintering of regulation, and obviously, coming with that, the lot of option to do regulatory arbitrage within Europe, and that ultimately resulted to the firm belief that there must be a European regulation, and not only in form of a directive, which then nationally needs to be transposed in various ways, but really to start right away with a regulation which is directly applicable throughout the EU. And that resulted in the digital finance package to be published by the European Commission in September last year, which has three components, which is the DORA, the Digital Operational Resilience regime, then the market in crypto asset regulation, and then another piece which is called pilot regime for the use of GLT in capital markets, which is restricted, I must say right away, to the financial services sector already holding licenses, and does not include any startups currently not being part of the regulation. And the market in crypto asset regulation was not built by looking into blockchain and DLT as such, and then trying to get your head around how to sensibly regulate it, but it was rather built within the niche that is left by the MiFID, the Market in Financial Instruments Directive, and the Payments Directive, and the e-money regulation. And because nobody dared to touch these existing regulations. So what they basically did is taking a look at, okay, what is left over by all of these regulations, and the crypto that fits in there, that is regulated, or that will become regulated by the MiCA. That ultimately results in something that does not feel a natural fit to the topic, to the subject that we're talking about here, which is kind of unfortunate. I do understand, the political limitations, right? But it will not result in the ideal regulation. It is basically a copy and paste work from the MiFID, squeezed over, crypto assets. And, content-wise, maybe to mention, it distinguishes between different types of crypto assets, and there is specifically a very high regulation for stable coins. And that was, obviously driven by the fear of Libra Diem to be imposed on Europe. And there was a strong will to give a pushback on that development. But that will also, push back other, maybe more favorable projects. So it's not a very, it's a very strong regulation trying to bring everything under the hat of financial regulation. So Josh, you will know this, right? The SEC also had always a very wide approach to everything, and that seems to come to Europe now as well. Well, there is a strong conflict that I also see, Tiana, you mentioned that, between the privacy regulation and the anti-money laundering regulation. Both regulations had been developed, within their silos, and it's really difficult to, navigate between those two. So I would really wish that the regulator would also take a look into that. And then obviously GDPR sets another line. So we are really in the middle of a circle of tons of regulations. And yes, it's not made easy for startups. These regulations are basically built upon the approach, as you also said, Tiana, that there is no decentralized service offering. They will all require a centralized provider for such services. And I think that's something that really needs to be discussed more openly, is when is something actually decentralized? I think we cannot ignore the fact that the technology by now may actually permit something that you could truly call decentralized. Although I want to say that a lot of projects out there are, if you really dig deeper, not decentralized, although claiming it. Yeah, but I think there is by now something that you can call decentralized, and that maybe provide a common good, right? Which is even desirable for us as society. So I wish we would take a closer look at that, right? More concentrating on what are the opportunities and how can we bring them forward. And currently the main part of the regulation is really concentrating on pushing back on crime, money laundering, and fraud. So yeah, a little bit movement to the positive aspects would be great.
So,
Can I just add one quick thing
sure.
On the back of what Nina said? So I think Nina brought up two great points, and I just wanted to provide some specifics around them. So the first is GDPR. We've got cut and paste regulation potentially, and then we've got existing regulatory regimes around different types of activities, right? So how does one comply with GDPR in the context of the FATF travel rule? Like, nobody kind of stopped to think about that. And the two just don't fit neatly together. So that's one example. And then the other example I would give is the decentralization and the EU's really trying to kind of stop the development of some stable coins in response to, as we know, projects that were being announced that they had a lot of fear with. But within MiCA, a decentralized, algorithmically generated stablecoin will be in scope with all the other stablecoins. And so you think, well, how's that going to work? But because you've got this cut and paste, it's kind of like, oh, we'll just figure that out later because we're just going to make this one regime. And I think that we're starting to see practical evidence of cut and paste just not being fit for purpose.
Thank you very much, Tina. I think both you, Nina, and you, Tina, have raised quite important points here. And partially, Nina, you started responding my next question, and I think we should finish with that. We have 5 minutes left, and unfortunately not much time to answer questions from the audience, but I think if we answer this last question, some of these questions will be addressed. Given that you are seeing from your daily work and on the ground with the clients, and you see the difficulties with regulation, you speak with regulators, you see what challenges they face, what would be your recommendation? Like, finishing on a positive side, what opportunities should we take? What recommendations would you have? And how ideally you think a regulation of crypto assets should look like? You know, maybe Ursula, you could start from this Asian region, which is so dynamic and actively working on the regulation.
Yeah, look, Sean, let me put forward some ideas, and I'm sure there'll be others. But look, you know, there must be space for creation and for experimentation. We're already seeing the impact, the positive impact on the innovation of the financial sector and the broader digital economy from blockchain. So that space is incredibly important. And so I think preserving that as a principle of regulating that space remains very important. Likewise, making sure that we're thinking about those other areas that need to be considered and balanced. And, privacy is the prime example. The third is really to draw upon analogs and not necessarily just the cut and paste, as Tina mentioned. And this is true, no more, than anything else that, than DeFi. So when we look at DeFi, we really need to be thinking beyond the examples from financial sector regulation and looking at how the law responds to software development generally. And already we have, established precedent of the creation of hacker software, for example, and drawing upon principles already in criminal law around complicit actors that are closely involved and support the end purpose of particular software. We also have examples beyond even sort of software and financial services, and we need to really think about whether or not we're trying to get to a point with software that we have with opium poppies, for example, where you have everything from the seed to the farmer to the distribution so highly regulated because of the possible positive and negative purposes of that. And I think that's where we get into some pretty significant differences in philosophies, regulatory philosophies, policy philosophies around the world. And that's where things do start to move apart. But what I would say, the recommendation is just to engage, to absolutely be unpicking and to be thinking not just about the immediate, a hammer to try and squash something that's a perceived risk, but to look through to the future around what the end state ought to look like. And what a safe and what a positive and an innovative digital economy looks like.
Thank you very much, Ursula. Josh, would you add anything to that from your own recommendation?
I think, and this perhaps is an obviously US-centric sort of view. I think one of the challenges is just, and ways forward, is to try and rely less on speeches and on informal guidance that then can later be disclaimed or otherwise changed. I know it's helpful in that it can get something out quickly, but certainly certain buzzwords that have popped up, for example, the use of, and I'm not saying buzzwords in a negative way, but just in a way that says, like, it's unclear then how you use the terms that are said. So for example, if we look, and not being critical of regulators or anything like that, just thinking back to Hinman's speech a few years ago about whether present day sales of Ethereum were sales of securities, when he talks about using the one term sufficiently decentralized, he used it one time, right? And then what does this mean? How important is it? And then when we got the framework from the SEC and all of those factors, how do you apply them, right? And are we still applying them? And when you enter into discussions with FinHub, is that what's being applied? Is there some different standard that's being applied? And as you may know, just in the past day, Hester Peirce, one of the commissioners, released her Token Safe Harbor 2.0, which provides, a potential framework for safe harbor for token issuers, and by extension, the trading platforms that would trade those digital assets. And it's well thought through, the proposal, how it will be included with the discussion and the framework and all the other kind of informal guidance that has been given by, for example, the SEC staff, which again is helpful. And if you sit down with FinHub and discuss things, yes, you can get practical answers. But I think having, as Tina, as Ursula, as everyone, as Nina, and as you, Agata, have mentioned, having a more comprehensive view when you go out about how will this work and what is the next step, and then what is the next step after that. I think what we continue to see, and if we think about, say, ETFs, crypto ETFs, right? Still asking questions, still trying to ask questions to get more information. And I think at a certain point, we need to have not just statements made that help clarify things, but things that you can actually, hook your anchor to, and
so more clarity.
Yeah.
More clarity. Thank you.
I liked how that was released on GitHub, Josh. It was very innovative in terms of consultation on that safe harbor.
Yeah, and thank you to Tina for flagging it.
I think Daniel is trying to tell us something. Have we run out of time?
We still have a couple of minutes if you want to.
So
Given
I
that we
would like-
started a bit late.
Okay, so I would like to ask Tina and Nina for the last kind of recommendations to finish off on the positive side. How do you see this going forward for this to go well?
So I have three things that I generally point to. So the first is when we look at what's working. And we mentioned Japan earlier. Japan does have quite a sophisticated regime now, and a way to oversee that regime that no one else has had the confidence to adopt. And that is an SRO model. So that SRO works with the regulator in Japan very closely. And the industry is always going to know before the regulator does if something's going off the rails. It's just the way it is. This industry moves really fast. So, some form of, even if it's just a feedback loop, I think you would increase people's understanding of what's going on. You would be able to react faster. And there is an element to self-governance where you're kind of shaming each other and nobody wants to be the naughty kid, right? The second thing is sandboxes. So going back to Commissioner Pierce's proposal, this is the second time around for this thing. I'm really hopeful that some element of that gets through, because there is a real opportunity to have a test and learn in a safeguarded environment that says, okay, we're going to let some of these things run. And we're going to determine who can access them or whatever, but we're going to really test it live. And then be actual to assess what the risks really are instead of kind of predicting what they might be. And then I think the third thing is some regulators like a rules-based regime. Some regulators prefer a principle-based regime, and they both have pros and cons. So if you have a rules-based regime, you break the rules, you know what's going to happen. If you have a principles-based regime, they tell you what they kind of want to happen at the end, but they don't tell you how to get there. And I think with this rules-based regime, they have this in places that they can kind of get you, right? They like hold it over your head. And then the principles-based regime, it's like, oh, well, you tell us what we should think. I think it would be fantastic if we could kind of combine those a little bit so that there's context, because just enforcing by rules and by fines and sanctions doesn't work. Telling people to figure it out for themselves doesn't work. So let's try and combine
creativity, collaboration and creativity on the part of the regulators. Thank you very much, Tina. Last word to you, Nina.
Yeah, thank you very much. I would like also to point to another important topic that is still missing in that space, and that is reliable digital identities, right? So that is one piece that all the nation states really actively must work on to solve that issue, because otherwise we'll never get to all these wonderful, arguments saying something is democratizing something, right? So currently the whole blockchain DLT space is not democratizing anything, it's plutocratizing everything, right? Democracy is one man, one vote, and not one token, one vote. So I think that's really, really important. Then the second thing is I would really like to invite the regulators and politicians to take a look at what potential public good decentralized systems could deliver to us as a society, and to get their heads around what they believe the minimum requirements could be for such networks or systems to be acknowledged as such a desirable public good, right? And then to create, I don't know, some regulatory reliefs, tax reliefs, acknowledge them as charitable, whatever, take the opportunity to take influence by giving incentives rather than only, punishment and threat, to positively influence the development in that space. I really miss that our regulators and politicians are taking this opportunity, which is well at hand. And, I think we could achieve a lot by adding that to the current regulatory approach.
So less fear-based approach and more open-minded approach, collaborative and forward-looking approach. Thank you very much to all of you for this wonderful discussion. I wish we had more time to discuss some of these issues that you have raised, but we've already talked for over an hour. So thank you very much for taking your time. It was wonderful. It was a pleasure to talk to you all today, and thank you to the audience for participating. Sorry we could not have answered the questions specifically, but I'm sure it's not the last discussion on this topic.